Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing the dollar index settle at the highest level going back to 2017, and it's not amazing data here in the U.S., but really more on the uncertainty and weakness of Europe. We had CPI data in Germany today, came in lower than expected, where GDP data in the U.S. came in at a tenth lower than expected than the first look at quarter two. I'm thinking this was the second look at quarter two, but consumer spending was strong. We also saw better just data across the board on those components. Weekly jobless claims, really nothing great there. Pending home sales, nothing great there. So it's a continued mixed story here in the U.S., but overall stable story so far compared to what we're seeing coming out of Europe. Now, we do have the Eurozone CPI look. It's the second look on August CPI. You got just regional numbers coming out as well to take a look at. But again, it's more of a story of uncertainty and weakness in Europe that's driving this euro down to the lows of the year, which are 110.20. We have a big support level of 110.11, all the way up to 110.50, and that's what we're testing into right now. That's major three-star support, but where the dollar is closing out at that new high. Now, we do have a swing high of the year, 98.70 in the dollar index after that Fed meeting. But if we continue to close up here to get that strong weekly close, it paints a path of least resistance to 101. Now that's the highest level, or going back to the highest level of the dollar index, 2001. You have a trend line coming in there at 101, and that's really where the dollar index seems like it has a target towards. It's just a slow move up. And again, it's not because the data here in the U.S. is better or the story in the U.S. is getting a lot better. It's the fact that there's weakness amongst its peers. So we're also seeing with the Fed the odds of a 25 basis point cut coming in September sort of get priced, not fully priced in anymore. It's sort of pricing out just a little bit. We're seeing about a 5% chance that they stay unchanged. A lot of pressure on the Fed as we look into a few weeks out now. But we're also seeing equities rally, risk on today. And the commodity currencies, the Aussie dollar and the Canadian dollars we've discussed here, are not following that risk on move and recovery on the week. In fact, the Aussie finished lower in the week, and the Canadian dollar just finished and it's holding support. But first, the yen is what's really reacting to it. The yen is getting hit. We're back below that 94.37, 94 and a half area that we had talked about as being a stabilization point earlier this week. Now, it was battling on there first half of the week. We're below there, and now we're looking at major three-star support down to 93.60, 93.70. We're testing it right now. We start getting it close below there. That's going to open the door for further selling. Then the yen is not the only safe haven that's getting hit here today, with stocks rallying and the dollar rallying. We're seeing treasuries come in, and we are also seeing gold come in. Gold hit 1530. It's a big support level. So just where gold is, you're seeing the yen there. That's a crucial level of support to watch here in the next 24 hours, and where we close on the week too, because you're going to get some really large weekly tails here in gold and the yen. So watch those. Now, back to those commodity currencies. Well, actually, first you got data coming out of the yen tonight. You have CPI out of Tokyo, as well as industrial production out of Japan, the overall read on Japan. So what we're seeing here too, it's not a reaction to the data in Japan. It's more what the risk sentiment is. What's the dollar doing? So although they may not really move the market too much, keep an eye on those. But now looking at Australia, you have some data coming out of Australia tonight, and the Aussie dollar, again, it failing its major three-star resistance. It's coming back in. You have those previous lows just below 67, but we start continuing to close weak, and these rallies are just failing its resistance, and they're more and more shallow. You're going to see a move down here. The next really big levels in the 63 ballpark. So that's really where the Aussie could be heading towards, with no light at the end of the tunnel on a trade deal. So keep an eye on that for the Aussies. It's just a lot of weakness there. For the Canadian, now you have GDP data coming out of Canada tomorrow. It's going to be a crucial read for the Canadian dollar, as it is at 75. Now, remember, earlier this week, we were bullish on the Canadian dollar. No follow-through at all. And it's really sort of shaking off what the crude oil has done this week in the last 24 to 48 hours. So that's disappointing, but it is holding the 75 mark. A lot of volatility expected given that GDP number. So a close below 75 is bearish. Another hold at 75 will reinvigorate a potential bullish bottom. So, be nimble on it. You have potential here to see this thing move higher, but you also have just as much potential on bad data to see it close on a breakdown. But give us a call. We're here to help with anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.